I want to be talking to you today about taxes. As you know, tomorrow is the last day of the year 2020, which means Friday we begin a new year, the year 2021. Now, beginning a new year means we begin a new tax season. In the United States of America, the IRS mandates individuals and businesses to file taxes from January 2021 to April 15, 2021. Tax law is one of my areas of specialization. I've been doing this for the past 12 years. I can file taxes for individuals, for any individual in the United States, in all the 50 states. I can also file taxes for businesses in the United States. Any business in the United States, the 50 states, I can file taxes for. I can also represent any individual taxpayer in the United States before the IRS. And I can also represent any business in the United States, in the 50 states before the IRS. In the course of the tax season, I'll be sharing a series of videos educating people so that they can make best decisions during the tax season. The first of this series of videos is what I'm sharing today. Today I want to be talking about filing status, choosing the right filing status. During tax seasons, a lot of people struggle to determine the right tax filing status for them. Choosing the right filing status will help you to get more benefits, deductions, credits, and tax rates. So the tax filing status you choose will determine the benefit you'll be given, will determine the deductions you can have, will determine the credits and the tax rates. Filing status is also based on your marital status, whether you're married or unmarried. In the United States of America, the IRS provides 5 filing statuses for taxpayers. That's individual taxpayers. 1 is single, 2, head of household, 3, married filing jointly, 4, married filing separately, and 5th, qualified widow or widower. Single. Who is considered single for tax purposes? A taxpayer can file a single when the taxpayer is unmarried on the last day of the tax year. So for example, tomorrow is the last day. If you were not married by tomorrow, you can file a single. A taxpayer can also file a single when the taxpayer is legally separated from the wife or husband under a final court decree, a final court order. Head of household. So who is a head of household and who qualifies? Now, head of household, filing as a head of household lowers your tax rates than filing as single and filing as married, filing separately. In order for you to qualify as a head of household for tax purposes, you must not be married on the last day of the tax year, which is tomorrow. You must also pay more than half the cost of keeping the home for the tax year. You must also have a qualifying person live with you for more than half the tax year. The exception is your parents. Your parents do not need to live with you for more than half of the tax year. You are considering somebody as a relative. That person, that relative, must be a member of your family. You cannot just have your friend as your relative. That person must be a member of your family. Now, if you're filing or claiming to be a head of household based on a dependent parent, the taxpayer must have paid more than half the cost of maintaining the parent's home. So for example, you say, I want to file as head of household, and I'm using my father or my parents as a basis for qualification, then you must have paid more than half the cost of maintaining your parents' home. Tax returns. Who can file jointly? In order to file as married filing jointly, the two taxpayers must be married on the last day of the tax year. So if you decide to file as married filing jointly, you must be married by tomorrow. You must agree to file a joint tax return. Remember, agree. You have to agree to file a joint tax return. You have to understand also that filing jointly means that two of you or individually, you are responsible for the tax, interest, and penalties that may be due when you file your taxes. And both of you must sign the tax return. Now, when you file, you may also file as married filing jointly, even if one of the spouses, has no income. Also, if one of the spouses is a non-resident alien, that means that person doesn't have documents in this country, doesn't have a work authorization card, green card, is not a U.S. citizen, that you can still file as married filing jointly, so long as that non-resident alien has a social security card, social security number, or IRS tax identification number. Next, married filing separately. Who can file as married filing separately? A taxpayer can file as married filing separately when the taxpayer is married on the last day of the tax year, but the taxpayer decided with the other spouse that they will file separately. Some of the reasons why they do that is because they want to avoid higher tax liability, or some spouse want to pay their own tax bills. Another reason that sometimes they give is that they want to see if they can get lower tax rate. Now remember, if you file as married filing separately, you cannot claim the earned income credit. You cannot claim the adoption expenses, education expenses, deduction for student loan interest. There will also be no exclusion for income from U.S. saving bonds if you have some U.S. saving bonds. You cannot also claim the credit for elderly or disabled people. The credit for child or dependent expenses will also most likely will be lower, or you may not be able to file. You may not be able to claim it. When you file separately also, you must include more of your social security income if you receive one. Filing married separately also will reduce your child tax credit and retirement savings contribution credit if you have one. In addition to that, your capital loss deduction will drop from $3,000 to $1,500. Your standard deduction that you may be entitled to may also be cut in half versus if you are filing jointly. Next, and the final one is to file as qualified widow or widower. Who is qualified to use this option? The taxpayer can file as qualified widow or widower if one of the spouse dies during the tax year. Taxpayer can file as married filing jointly in that year. And remember, the year of death is the last year that you can file as married filing jointly. The taxpayer must be entitled to file as married filing jointly with the other spouse in the year the spouse died. The taxpayer must not marry before the end of the year. Taxpayer must have a child or stepchild he or she can claim as a dependent. A child must also have lived in the house all year except temporary absence. Taxpayer and deceased spouse paid more than half the cost of maintaining the home. So remember, 5 options when you are filing your taxes. You can file single, you can file as head of household, you can file as married filing jointly, you can also file as married filing separately, and you can also file as a qualified widow or widower. This concludes the first series of videos I'll be sharing. Thanks for listening and thanks for watching. Stay tuned for the next video. Thank you.